And Michael Sonnenschein, he's the managing director of Grayscale Investments, the largest asset manager in the digital currency space. Michael, great to speak with you.
Same here. Thanks for having me.
BTC is also up 25% this month alone. And I'm wondering, what do you think is a primary driver of this rise, especially because, I mean, we're just about a week away from the election. I mean, does that have something to do with this?
I think what we're seeing is that Bitcoin has really solidified its role as digital gold in investor portfolios. Investors are telling us that Bitcoin warrants a place in their portfolios because they're living in a world characterized by digital exchanges and not physical ones. And it's not just investors telling this. We're seeing the same kind of reports of research coming out from major banks like JP Morgan. And what's interesting is that Bitcoin continues to get challenged. And each time it does, it comes out stronger. And honestly, 2020 has been no exception to that rule. This year, we saw this past spring, one day where Bitcoin drew down almost 50% in a single day. And now Bitcoin's returned to almost 90% year to date, which is, broadly outperforming the equity markets and a lot of other asset classes. So investors really just can't ignore it anymore.
How excited were you when Paul Tudor Jones was on Squawk Box and he talked up Bitcoin? I mean, were you high-fiving your partners over at Grayscale?
There have been a lot of good tailwinds. We've seen PayPal meaningfully enter the space, public companies like Square and MicroStrategy adding Bitcoin to their balance sheets. And yes, we're certainly seeing it at Grayscale. We've brought in over $2.5 billion in new investor money this year, which is more than double our cumulative inflows from 2013 all the way through last year. So we're seeing growth on all fronts.
So it's Steve Grasso. So when you just described the volatility that's within Bitcoin, that's what makes me want to stay away from it. So when do you start to feel as if you'll have a more substantive, sturdy market with a retail audience and an institutional base that will feel comfortable holding it? I've seen the headlines from PayPal, from Square, from Fidelity with the new fund. When do you start to think that volatility, where if I bought it today, I don't have to worry about losing 50% tomorrow, will start to solidify a little bit to the upside?
I think we're actually seeing already quite a bit of that. What's been interesting over the last year or so is really the development of a two-sided market, borrowing and lending, derivatives. I think that's really helped to decrease a lot of the volatility that we're seeing in Bitcoin. But I'd also say most of the investors that are coming to Grayscale these days are really looking at their allocations over a medium to longer term time horizon. And so when we do have moments of volatility, like that 50% drawdown day, we had investors looking to opportunistically add to their positions, not running scared because Bitcoin had a drawback like it's had before.
Michael, always great to get your thoughts. We appreciate it.
Thank you.
Michael Sonnenschein of Grayscale. Pete Najarian, how are you feeling about Bitcoin as a placeholder in your portfolio today versus, say, 2 years ago?
Yeah, I think people have gotten a lot more comfortable with it, Mel, than they were a couple of years ago. I think every year that goes by, people find a little bit more comfort. Obviously, the Jamie Dimons of the world and so many others that weren't involved initially have sort of started to get involved a little bit. And so I think going forward, yeah, this is going to be something much bigger. I'm getting a little bit more into it myself. My brother John's been into it for multiple years, but I think this is something that we're all adapting to slowly, but we are adapting to it. And some of us probably have gotten there too slowly. And I'm in that camp because this is a category that's absolutely been on fire. I know it's volatile, but it certainly is a category that's gone just absolutely parabolic versus the markets.
Tim, quick thought here.
I think the next part of this trade is to go into the broader, digital currency markets. And again, we've seen this before, and a rally in Bitcoin is pulling broader currencies. I think you just have to be very careful, but the legitimacy is there. I don't think there's a question about that. I think it's really people need to do their work on outside of Bitcoin where there's opportunities, because I think there are many.
Bitcoin is right back around where it was when the crypto bubble crashed in 2018. In just the past week, Bitcoin has added more than $19 billion to its market cap. A few catalysts here driving Bitcoin's 25% rally in October. Earlier this month, Square said it was adding $50 million worth of Bitcoin to its balance sheet. Then PayPal launched its own crypto offering just last week. We also had Paul Tudor Jones appearing on Cnbc last week, calling Bitcoin the best inflation trade. He compared it to an early investment in Apple or Google. JP Morgan today also saying they would use their digital currency commercially for the first time. But Brian Kelly of BKCM highlighting something else pretty interesting from the firm. JP Morgan's popular weekly report, Flows and Liquidity, has featured Bitcoin in the past 2 weeks. He says that could be a sign of some more mainstream investor interest. Bitcoin believers tout it as sort of a safe haven asset. They think of it like gold, but this year its prices have been closely correlated to U.S. equities. That trend, though, broke in October as stocks sold off this week. Take a look at Bitcoin. That's up 14%. Guys, back to you.
So what do you think? Is this move in Bitcoin fragile, as we've seen it before? But I keep hearing more and more people talking about Bitcoin and gold, and these are respected, reputable portfolio managers.
You think of it heading into election, a lot of people think of it as a hedge, and then you also, like Paul Tudor Jones said, against inflation. You also have the economy going digital. So during COVID, a lot of these even payment companies that do digital finance have said they've seen the digital economy accelerate by things like 5 years. So if you do take crypto seriously and think, oh, it's interesting for now, but it might take multiple years to get there, I think during COVID, a lot of those digital finance tools have been proven. So who knows? We'll see if it ends up like 2018.
Welcome to the Crypto Teacher. And guys, I come with that video to make you think early. Now, Bitcoin made a surge yesterday, of course, pulling back like I stated yesterday. Right when we're coming towards election, but who do we have doing reports on it? CNBC. And every time CNBC reports, what do? We get a big dump. But they never report the dumps. They only report when we're surging to get people in. You know what they're trying to do. Shoot the message to the masses so the masses can run in. While you running in, they're selling. That's how it goes, guys. Do not get caught up with that. We know that we have CME coming up, and they have been breaking records. So we know for a fact, guys, we're going to be coming down. Not just CME, you have Binance, you have a little BitMEX, OKEX. Guys, we know we're going to be coming down. But we know what? They need Bitcoin on the 5th. We have election on the 3rd, and then they need Bitcoin on the 5th. And then we can get that stimulus package. Plus, they've been cutting that $500 billion. And if we can stay at a 12,000, 12,500 range, guys, we will be looking at 16 to 17,000. And we may hit that 20,000, guys. Y'all have a wonderful day.